Hi, welcome back to the Condo Expert. This is Linda Pinizzotto, and today we were speaking about mortgages with Faisal Jamil, the Mortgage Edge. So, we touched a little bit all about mortgages and so on, Faisal.
Yes.
Now we're going to hit the hot topic.
Okay, let's go. Let's have some fun.
Hot topic, maintenance fees. People cringe. They hate maintenance fees. They don't like maintenance fees.
They do. They do.
But importantly enough, I think the main part of the maintenance fees is what exactly does it break down?
That's a very important question. And that's a question clients ask me on a regular basis. What is the purpose of a maintenance fee? I'm paying property taxes. What more do they want from me?
Exactly. And they don't understand. So the one big one, before we even get into utilities, the one big one is going to be, of course, common elements. Like, people are saying, what exactly is a common element?
Very, very valid question. And I look forward to hearing your professional explanation on this one. I'm going to take notes if that's okay, Linda.
No problem. For sure. Because the common element is the common area of the building. So now the common area. So if you don't pay maintenance fees, nobody's putting any money towards it. That means that this building is going to be ridiculously run down.
So what's a common area?
So a common area is coming in through the front door, which is anything to do the outside area of the property. So if you take your property, you have your building stuck on the property. Anything outside of the actual unit that you own is a common area.
So the hallways, for example, the
elevators, stairwells,
keeping the garage clean, maybe security. Very
exactly.
important stuff.
Landscaping, like everything. So it's the kit and caboodle of the rest of the properties other than just the unit. But now the unit, that's an interesting part. And especially you being a mortgage broker, there's a declaration, and the declaration is the Bible for the building. So it literally outlines exactly what can be done and what can't be done, how the board of directors should operate, and the structure. Now that structure has to be in compliance to what's called as the Condo Act.
Yes.
But however, the actual building itself, some buildings, when people are purchasing, they don't realize it, but that balcony may not be common elements. It could be actually part of ownership to the unit.
Okay,
that's interesting. It's better for the balcony not to be. Like, the balcony really should be part of common elements, because should a building need major repairs, can you just imagine how expensive it would be starting to repair balconies?
Oh yeah, I don't know how they build those structures in the first place, but I know, generally speaking, poured concrete for a very small area can easily cost thousands and thousands of dollars, not including demolition, properly destroying it if necessary, making sure the concrete pieces do not damage people below. I'm sure there's so many risks and costs associated with repairing a balcony.
Exactly. I'd love to think that we are in a city where we have no snow and no salt, and
we have to deal with the elements on a regular basis. We get everything.
Exactly. So those elements will actually wear down, because concrete is porous and they absorb it. So, there is going to be wear and tear on the building. So where we're going with all this with mortgages, and just to touch common elements for a moment, is that if there's a very large expenditure in the building,
yes.
Say, for instance, they have what's called as a reserve fund. And now, what is a reserve fund? So a reserve fund is monies that have been kept aside in the building. They have to go by a study, knowing exactly how much of the maintenance fees is the reserve fund portion. So they will have the funds later to be able to fix major repairs, depending on the time that the actual study says that they are able to repair and fix these things.
Yes.
You, as a mortgage broker, you've got a big picture going on here, because you see the maintenance fee has to cover that sustainability of working operations of the building.
That's right.
So on a percentage-wise, how much of that maintenance fee does the bank take into consideration?
Depending on the lender and the insurer that we're dealing with, and that's something that a lot of clients do not realize. I have to manage multiple parties. Not only do I have to make sure a lender is comfortable with dealing with the associated risk of that property, I have to make sure that the insurer is comfortable in dealing with that property. So lenders, insurers, they both have their own ins and outs of how much of a percentage of the maintenance fee they like to take into consideration in the overall financing equation. Generally speaking, my findings are that most lenders will take about 100% of the cost of the condo fee. Some lenders and insurers will take 50%, but the majority of them are sitting closer to the 100%. What the lenders and insurers like to see between the two of them are condo fees that are not extremely expensive in relationship to the value of the condo. So if we're dealing with condos that are costing $100,000, $150,000, but the condo fees are maybe $750 upwards per month, they're going to look at that and say, might not necessarily make sense. What's happening? They want to make sure that they're dealing with a property that, should there be any issues, the condo has enough money to maintain itself and take care of the necessary repairs. If they're dealing with a condo corporation that does not have enough money in its reserve fund, and they're going to come to the owners and increase their fees, and then the owners say, no, I don't want to deal with this, and then they walk away, then the lender can possibly be on the hook for the balance of the money outstanding. The insurers may have to step in. So there's a lot of consequences for an owner, the lender, the insurer, should there not be enough money in the reserve fund. So that has a huge impact in financing. And I know there's buildings in downtown Toronto that insurers will say, we're not going to insure in this building.
I know that there was, in the last, I guess probably about last 3 years, I've seen some lawsuits that have been actually put forth on condominium buildings, and they're literally suing the developer. But the sad part about it is that now those buildings have gotten a red flag from Genworth and Canada Mortgage and Housing because they're not willing to insure them as a high ratio.
That's right.
So therefore, everyone that wants to buy in those buildings has to come in with what, 20%?
20% down, exactly,
right.
exactly. Not a lot of people have 20% down.
Well, it hurts the market because what happens is it breaks down. It breaks down the affordability of how many people out of 50 people that will have the 20 or 25%.
Very, very few.
So if you take away that high ratio element.
That's right. And for the majority of people, condos, and correct me if I'm wrong, Linda,
Yes.
are seen as a stepping stone for homeowners.
Generally
right?
speaking, and in one way or another, I mean, people want to start gaining equity in order for them to do something with it. So they take a few different reasons. One
Yes.
could be, exactly like they're building equity. They're, eventually maybe they do want to take it and move into a single detached or whatever. But other ones, young professionals or even, people that maybe are more in tune with the investment world, they may keep their condo and want to go buy a second one.
That's correct. That's correct.
Or the older population now, we're downsizing from the houses
That's
and
right.
into condos.
Yeah.
So, we have a huge market out there that our government, quite frankly, has to really protect. Because they've got some changes going on with the Condo Act right now.
Do people realize what some of the consequences can be of having ownership in a building that has very, very minimal reserve funds? Like, does this come up on a regular basis when people are buying condos?
I am so glad that you asked that question, Faisal. If I could take a hammer, I would hit some people over the head because I cannot believe how many condo owners out there, they move into a condo because they want easy everyday living.
Sounds about right.
Yeah, it's all good. They can have it in their own suite, in their own unit. But please, pay attention around the building because the building is where the value is coming from.
Absolutely.
It's
for everyone.
You yourself, if you've got a mortgage, if you've got a client, you've just arranged for a mortgage on the property. And now, as you know, you can elaborate, the mortgage company steps forward, sends an appraiser.
Yes.
So that unit is awesome. Whoever owns it, oh my God, they went out, they bought Mealy appliances. They bought the best art shop, when they were around, bought all the best furniture you can imagine. There's gold dripping from the ceilings, but unfortunately the building's not doing so great. So what happens? The building is not doing great. So all the comparables in that building are coming up at $250, but these people bought at $350 because, of course, they bought the creme de la creme of the unit that's in that building.
Imagine that.
Yeah. So what does that do? They're going to get financing on this deal?
No, absolutely. It's going to make things very, very difficult for them. Why is a lender going to extend themselves on a home that's worth $350, but the surrounding condos are only worth $250? That's a high risk for the lender.
Absolutely. Huge risk. There's 300 units in that building. It's only one.
That's right. So if it comes in appraised at a much lesser value, the clients have to come up with a much bigger down payment if they really want to get into that building.
But then if they do, the long term, they're going to run into that exact same problem in 2 years or 3 or 5 or 6
when
or whatever.
When it comes time for them to sell it, they're going to have the exact same issues over and over again. So, my takeaway out of this conversation so far is clients really need to be educated as to what's happening in the background of that building. That's great up front. They see this wonderful, beautiful unit. But now we have to see the legal paperwork.
Well, this is it. And then, we talked about like the maintenance fees. So the other side of it, your common elements, was insurance.
That's right.
The building, now that's cool. I mean, I guess it was about two radio shows ago, with respect to condo insurance,
Right.
because that part of it with the building is actually included in the maintenance fees. So we covered that whole thing because I brought in the president of an insurance company to identify what's covered and what's not.
Fantastic.
Because, if you don't have that coverage, how's the mortgage brokers and how's the mortgage companies want to insure a mortgage on a property if there's no mortgage?
That's right. They want to make sure their investment is protected.
Exactly.
Should something happen.
So that side. So aside from that, we touched a bit about fixing things. There's something called a special assessment.
Okay.
So what happens is that the mortgage has been approved, everything is wonderful, not a problem. The lawyer all of a sudden takes a look at the paperwork because they're checking it to make sure that there's a financial viability for the building.
Right.
And lo and behold, there's a note there that the board has just approved an expenditure of $200,000, and every single unit is going to get tapped at $2,000 as a special assessment.
A one-time special assessment.
Right. It can be one time, or it could be driven. If it's one time, I guess it's cleared and it's out of the mortgage broker's hair. But
Yes.
if it becomes an assessment that has to range over 2 years or 3 years or 4 years, then I guess it would have to be something that the bank would look at and again compromise what the affordability levels are, would it not?
Absolutely, absolutely. And that's something that the buyers, of course, need to be comfortable with. Are they willing to buy into a building that does require additional funds, depending on what the issues can be for that building? So what kind of issues can we see that would pop up that would require maybe $200,000 worth of repairs, Linda? Like, what do you see on a regular basis?
What we see, and it's a very sad thing, because you see, we're trying to, as you know, I'm involved with the Condo Act review process
Yes.
with the Minister of Consumer Services for the Condo Owners Association. And what we're trying to do is we're trying to provide and implement better regulations for board of directors. Everything that we've talked about today, the condition of that building is the responsibility of the board of directors. So, if people that are living in a building have to start being concerned about what's happening in the building, then they really have to get more governance and accountability by that board. So, say, for instance, if a board takes a look at their studies and they really ignore them, they don't pay any attention to them, and they just decide that they're going to revamp the lobby because they got it in their mind, they went to the home show, they thought something looked really great, and they want to come in and do it. So
Yes.
they have just approved it. A lot of it can't go to the reserve fund studies because it's not part of the year of when it's becoming due. And then all of a sudden they say, well, sorry, we're going to go ahead with it because we believe it's going to put more value in the building. And they create it as a special assessment.
So do the owners of the units, do they have any say in this? Like, how can if I were a potential owner in that building, have a voice?
Well, according to the Condo Act of the provincial government, they have a mandate that they have to follow in order before they can do expenditures. Where the problem is that the board of directors, there is no governance accountability, so no one's watching the books. Other than the
Okay.
condo owners that live in the building, where many of them, or even don't live in the building, where many of them don't even as much as turn up to an annual general meeting.
So the annual general meeting, they have a meeting once per year to talk about issues with the building. They go over the financing reserves. How many people are typically required to show up to this meeting? Should it be everyone?
Everyone should.
Okay.
Absolutely, everybody should. But unfortunately, right now, on an average, if a building has 300 owners, you will be lucky to see 25 to 30 owners in the audience. It's a shame. It's ridiculous. Like we're not even at 1% attendance. However, at the same time, the Condo Act stipulates that you have to have quorum.
Okay.
So therefore, the quorum has to be obtained. So if you can't get it in present, by people attending, then the board or the property management run through the whole building and, and to the owners off site and whatnot to see if they can get proxies.
All right.
Okay, but this is a whole other ball of
Okay.
wax. So we're going to be touching all of this later. But
Okay.
those proxies, I will tell you,
All
are
right.
being forged, and we all know it. And the ministry is now moving forward to make changes of third parties because some board of directors and some... Actually, I had that. I want to touch on this really quickly.
Sure.
I actually saw this situation come back this last November in a building that I own in. We have never, ever, ever had more than 35 to 40 people in the audience at an AGM. Ever.
That's unfortunate.
Ever.
That's so
Okay.
unfortunate because the financial impact that can have on all the owners in that unit, in that building.
Oh, it's unbelievable. Well, what happened in this case is that there's no doubt that this board has to be under a federal review, provincial review, no question. And what happened was 62 proxies, lo and behold, showed up. That building has never had that many proxies. Like most proxies come in about 35, 40 proxies. Like you're barely
Which is
making
quite reasonable.
You're barely making the limit. But in that building, they ended up showing 62. And I requisitioned the lawyers and the building, asking them if they could please allow me access to see these proxies. And I was refused on personal information privacy act.
Okay.
And so all I could see is a piece of paper with the X marked, not the name of the owner or anything. So who's covering up what?
So I could have written 62 pieces of paper, changed the X a few times, and you wouldn't have known the difference, and you're supposed to trust that.
Yeah, and I'm not even allowed to see the paperwork, according to the condo lawyer that they hired who actually attended the meeting. And this same condo lawyer challenged me personally at the meeting when I asked them questions. So,
And you own a unit.
I own a few units.
You own a
and,
few units,
Yeah,
okay.
absolutely. And this is par for the course, and that's why it's a very dangerous situation out there right now with just the way everything is going. But, interesting, I mean, on the mortgage side of things,
Yes.
when these buildings are having these kind of controversial board of directors out there, and a board of director is only there for, depends on what their term is, generally 3 years term, not where the occupancy time is that, I think right now everybody is really moving forward in the hope that the boards are making the right decisions for the building.
Let me you say that one more
See?
time. You said you hope.
Yeah, I hope.
You hope.
Yeah, but
That's all we have is hope.
That's all we have is hope. We don't have anything more than hope. And we hope that we have unlicensed property managers, because none of them are licensed. Property management companies aren't licensed either. So we hope that those property managers and property management companies see more value in doing the right thing in compliance to the Condo Act than actually wanting to sideswipe it slightly in order to maintain the contract, which, by the way, the board of directors is the ones that sign.
But we can only hope that this board is handling potentially millions of dollars in a proper fashion that best represents the interests of the owners in that building. But unfortunately, all we can do is hope.
Hope.
That's
Exactly.
quite unfortunate. That's quite unfortunate.
Well, it compromises. It compromises our entire condo world, quite frankly. It really does compromise it, without a doubt. And that's why the Condo Owners Association has stepped forward to basically force compliance and work with the provincial government to make changes to the Condo Act that will force compliance and make sure that the government of our provincial government has some kind of legislation in place that they will be the ones that license property managers and property management companies, at least if you get that entity.
Yeah, and it sounds like that should create a little more accountability.
Well, that's the main thing, is accountability. Governance, accountability, yes,
because
absolutely.
we've got these board of directors who are handling millions of dollars, and unfortunately we have a low turnout at these annual general meetings in which the owners have a voice. This is their time to say, hey, what's happening? But they're not showing up, so they're essentially letting the board of directors do as they please.
Right. Or the board will do what this building did. They grabbed, about 20 people of their friends who got them on board with nothing but lies. And then what they did was they moved forward to convince everyone else. But people are afraid. I cannot believe the fear.
What are they afraid of, Linda?
They're afraid of being ostracized in the building. They're afraid that all of a sudden the board might decide to throw a lien on their property, which we've got reports on that as well. People are afraid, and they don't want to move because they can't afford right now to move.
Yes.
They love the building. They love everything about
Location.
it. They don't want to sacrifice this by getting into an argument with the board of directors or even the property manager. So they're afraid.
So they're afraid to voice their opinion at these AGMs because they might have to deal with the repercussions of that.
Exactly.
That's very unfortunate that people are afraid to have a voice. So what can we do to help overcome these fears that these people have? They don't realize
Well,
the
I think
financial.
the interview with you today, Faisal, has been wonderful. And, as we move forward and get into even more intricate information, because what people out there need to understand. They hire yourself as a mortgage specialist, and you give them all the information on the financial aspect.
Yes.
And they get up day in, day out, go to their jobs day in, day out, have their paychecks day in, day out, pay off their mortgage day in, day out. And what are they doing? They're putting it on a silver platter and they're handing it over to the board of directors and say, here, do whatever you want to do with the building. And it doesn't matter if I lose money.
Yeah, that's quite unfortunate. And, that's something I'm definitely going to strive to do on a go-forward basis is when I'm dealing with clients who are buying into condos, I will definitely encourage them to get more actively involved. And that's a huge message that I'm taking away from this.
They have
is
to.
that I have to encourage them to be involved.
And register with the Condo Owners Association, because when the higher numbers that we have registered with that association, the more strength we have for positive changes to stop this. Good board of directors out there, they're not going to be concerned. They're not going to be the ones that are ostracizing anybody.
No, they're the ones who are kind of in control right now.
Yes, they're going to be the ones that are actually, helping people and wanting to make sure that not only is their investment protected, but the whole building is. So, yeah, absolutely.
Wonderful. That's
so,
great.
With mortgages, a whole other ball of wax is new construction.
Yes.
New construction, because so much construction going on there with condos.
Very, very different type of market. My experience with new construction is that lenders, the builders like to deal with a select amount of lenders who will help finance the construction. So the builders themselves will tell clients to see a specific financial institution in which they have made a previous agreement that says you will hold a rate for us for maybe 1 year, maybe a year and a half, depending on how long the builder thinks it will take to complete this project. So that's one interesting issue of financing, is that mortgage brokers typically do not get too heavily involved, in my opinion, in helping clients finance new builds. However, when it gets closer to the closing date, we can certainly step in. We can give a second opinion to clients and say, this financial institution, here are some of the pros of dealing with them, here are some of the cons in dealing with them. Ultimately, the clients can decide who they wish to have financing with. I've only seen one situation where the clients were mandated to deal with a certain financial institution, but ultimately it should be the clients who decide who they want to deal with, because they're the ones who are paying the mortgage, certainly not the builder.
Well, exactly. And then too, I don't know. I think that there's a bit of a conflict of interest there by people going to the builder and taking the mortgage financing company they're dealing with. I think that with the extensions of the time period, when they're buying, when they're closing, when they're registering the building and all this stuff, if they've got a mortgage broker like yourself and people know you and they trust you and they understand and, they go in with their eyes wide open, not only on the purchase, but through the process, they have a go-to person.
Yes.
There's so much value in that. I don't understand why anybody would not want to do that kind of a route when there's just so much value on it.
There is. And you mentioned one key word, and you said trust.
Exactly.
When I deal with clients, I love to educate my clients, make sure that when they come and see me, I've told them to do their homework. I've gone to them and said, who do you bank with? Okay, find out what they can offer you. I try and tell my clients, it's not all about the rate. There's so many different financial institutions out there, and my experience of being in banking for more than 15 years says that banks, they typically like to deal in their best interest only. Whereas when you're dealing with a mortgage agent, we deal with multiple lenders, and we truly deal in the best interest of the client. So like you said, it's all about trust. And I don't want clients coming to me and saying, hey, Faisal, what's your best rate? I only care about rate. I don't care who you deal with. I steer away from those clients. I'm not a place where you come and get a discount rate. I bring value and trust, and I guide my clients through the entire process. And if I have a client that's strictly looking for the best rate, I'll tell them, unfortunately, I can't help you.
But sometimes, too, they get promises out there elsewhere, and then the promises don't come through.
That's exactly it.
I think that, trust, especially in the mortgage world, with anything going on with your financial situation, people have to develop that. It's no different from having a doctor or a lawyer. We'll talk a little bit more with Faisal Jamil. He's a mortgage agent with the Mortgage Edge. We've touched everything today relating to mortgages. It's been really an interesting topic, so please stay tuned and we'll be right back.